Let me ask you something. If Dangote Cement shuts down tomorrow, who actually loses money? Is it Dangote himself, the workers, or ordinary Nigerians? To answer that correctly, you need to understand what a company really is. And once you understand that, the Nigerian Stock Exchange will finally make sense. So, let me explain it like you're 5 years old. First of all, what is a company? I want you to forget stock prices for now. Think of a company like a big basket. Inside the basket are valuable things. Some you can see, some you can't touch. You can see the factories in Ogun State, the delivery trucks in Lagos State, office buildings in Abuja, machines and equipment as well. But some things inside the basket you cannot touch. Things like brand name, reputation, and trust. Take Dangote Cement for example. Yes, they have factories and trucks, but the real power is when Nigerians see and hear Dangote, they trust it. The trust is worth billions. That is what a company really is. A basket full of valuable things, some physical, some invisible, but all valuable. Now, who owns the basket? In other words, who owns the company? Let's make it simple. Imagine you want to open a sachet water factory in Lagos. You saved 5 million naira, but you need 15 million naira. So what do? Option 1, you borrow money from a bank. They give you 10 million naira at interest, but you must pay them back, whether your business succeeds or it fails. The bank is like a bond holder. They lend you money. They don't own your company. They just want their money back with interest. It's low risk, fixed reward. Now, let's talk about the second option. Instead of borrowing, you tell your uncle, your friend, and 2 investors, hey, give me money, I'll give you part of my company. Now they become owners. If your factory makes huge profit, they win big. If it fails, they lose money. And that's a stock in simple terms. A stock means ownership. It is higher risk but unlimited upside. Now, here is the rule that never changes. If the business collapses, the bank gets paid first. The owners get whatever is left. Sometimes that is zero. That's the difference. If you have a better understanding at this point, do me a favor, hit the like button, comment the word explained in the comment section, and don't forget to subscribe to my channel so that you don't miss future videos. Now, another big question is, how do companies enter or get listed in the Nigerian Stock Exchange? Let's break it down. Imagine your sachet water factory becomes massive. You are now supplying ShopRite, supermarkets, everywhere. You want to expand nationwide, but you need billions. So, instead of borrowing more, you decide to sell small pieces of your company to the public. This is called an IPO, Initial Public Offering. That's when a company lists on the Nigerian Exchange Group. The first time people buy those shares, some small pieces of your water factory, the money goes to your company. And after that, what happens? If I buy your shares and later sell them, the money goes to me, not you, the company. Let me explain that again. When you buy shares on the Nigerian stock market, most of the time you are buying from another investor, not the company. It's like buying a Tokunbo car. Toyota got paid when it was brand new. After that, it's just Nigerians selling to Nigerians. That's the stock market in simplest terms. So, why buy shares? You are now saying to yourself, if money isn't going to the company, why should I buy shares? 2 reasons actually. Number 1, price growth. You buy a stock at 20 naira, years later, it's 100 naira. You've multiplied your money. Another reason why you buy shares is for the purpose of what is called dividends. A dividend is a portion of a company's profit paid to shareholders, offering a steady income stream and signaling financial health to the market. Some Nigerian companies share profits with shareholders, companies like GTCO, Zenith Bank, MTN Nigeria, and many more. If you own shares, they may pay you cash every year. You didn't work for it actually, you just owned part of the basket and you get paid a portion of the company's profits. That's powerful if you may ask me. But prices go up and down in the stock market, you may say. Why is that? Why do prices move every day? It's not magic, it's not spiritual, it's simply supply and demand. I'll say that again. It's supply and demand. If more people want to buy GT coal than sell it, then prices go up. If more people panic and sell, prices go down. And here's the deeper truth. People are not buying today. They are buying what they believe will happen tomorrow. Let that sink for a moment. People are not buying today. They are buying what they believe will happen tomorrow. If Nigeria's economy improves, stocks rises. If inflation rises or the naira weakens badly, investors panic. Sometimes it's logical. Sometimes it's pure emotion, fear, greed, excitement. Millions of Nigerians reacting at the same time. And that's exactly the market and why its prices go up and down. Now listen carefully, and this is very important. Most people think the way to make money is to pick the next big stock. But the truth? Even professional fund managers struggle to beat the market consistently. So what should a beginner in Nigeria do? Instead of guessing, own many companies at once. There are index funds and ETFs that track the Nigerian market. So when you buy them, you are buying small pieces of many companies at once. So instead of betting on one business, you are betting on the Nigerian economy itself. Is it exciting? No. Is it powerful over 10 to 20 year period? Yes, because wealth in the stock market is not built by hype. It's built by patience. Invest consistently. Don't panic during market crashes. Think long term. Now, let's recap. A company is a basket of valuable things. Stock means ownership. Bonds mean lending. Stock prices move because of supply and demand, triggered by individual behavior, emotions, greed, panic, and more. You make money through price growth or dividends in the stock market, and the smartest beginners diversify and think long term. And that's it. The Nigerian stock market is not gambling. It's ownership, and ownership is how wealth is built. If this simple video helped you to finally understand the stock market, then welcome to Investive. On this channel, we break down money, investing, financial wisdom in simple terms Nigerians can actually use. Because financial freedom is not for the rich and wealthy. It's actually for everyone. So, if you're new on this channel and you haven't subscribed yet, do consider hitting the subscribe button. It takes just a few seconds of your time. Thanks for watching this video, and I'll see you in another one.